Snell Cooke, your host of the Credit Union Connection, and I'm here today with a guy from a BANK. But he's got a really good thing going on here. John Blizzard, he's the CEO of Seattle Bank, as well as CD Valet, which I'm sure some of you work with. But welcome, John. Good to have you.
Good to see you, Sarah. Thanks for having me on.
Absolutely. And so tell us a little bit more about how CD Valet started and who you work with and that kind of stuff. Just a real quick intro.
Yeah, sure. Yeah, we have a single location bank in Seattle, and we work with customers generally locally, but on the deposit side, we broaden that to be national. And we learned years ago to go compete digitally was just a whole different game. And so we learned a tremendous amount about the deposit business, about the digital competition, digital marketing. And we had decided there was not a good solution for banks like us or even credit unions to go compete digitally. So we created CD Valet as a marketplace for consumers and for financial institutions to compete. You can't buy your way to the top of the rate table, for example, for consumers. So they love our site. We've had almost 4 million people to our site. We've probably had 800 or 1,000 in the last hour. It has resonated with consumers in a big way. And the reality is, what we found in our research, this goes back many, many years ago, is the good old boring CD business is about 15% of bank deposits and credit union and $3 trillion, but it's kind of an unloved area.
Yeah.
And the banks and the regulators, people call them, hot money and all this stuff. We call them savvy savers, and they have a
Hmm.
lot of money, and we are working really hard to get them the best deals and help the banks and credit unions who are really absent digitally. It's such a competitive marketplace to be found digitally when you're competing against super big institutions, marketplaces that are very savvy. We enable them to go compete and be found because
Hmm.
oftentimes, basically, we find that credit unions or banks, community banks, just have the best deals by far, and we just try to help amplify that in a big way to help the credit union or bank get find new members and new customers.
Hmm.
It's been
Yeah.
a lot of fun.
Yeah, for sure. And although you say the CDs are kind of sexy right now, though.
Kind of sexy, yeah. You'd be shocked how many people have opened CD. It's not just the older generation, although they have a lot of money in CDs. There's a whole
Mhm.
lot of young people now putting money in CDs for the first time.
Yeah, yeah, and some of the research you did most recently, you found in June the average credit union CD rate, the average APY was approximately 17% higher than the average bank credit union over a bank. So that was really interesting. There's a bunch of data you found, and I'm gonna look at my notes here to make sure I get the numbers right. But of the top 25 12-month CD rates, 24 of those are credit unions. And of the institutions that increased CD rates, approximately 58% were credit unions and approximately 42% banks. So, why is this happening? Are we looking at a liquidity issue among credit unions that's not hitting the banks maybe as much, or how much of this is due to the tax exemption, if we're allowed to talk on that subject?
Sure. Yeah. All those are anything's free game. I've for my whole career kind of avoided all the politics between banks and credit unions. I started my career in a credit union, been CEO of banks for a long time, worked at the Federal Home Loan Bank, selling money, liquidity to banks and credit unions. So I kind of just avoid all the politics. We just try to drive solutions to consumers
Mhm.
and help FIs. But it is great questions. First of all, we have the best data in the industry because we are tracking over 30,000 CD rates from over 4,000 institutions every day, and we have a snapshot of that data that goes back quite a ways now, and so we can provide. And because we're monitoring, hey, what credit unions, what banks change rates, who went up, who went down, we can aggregate that data and then supply stuff like you saw in our Watchers report,
Mhm. Mhm.
which is super unique. So that's awesome. But it's really more of, I think, for the credit unions, a lot of times it's a distribution problem on the marketing side. If you have a more constrained membership, right? If you're in a couple counties, or if you're even limited to a state, digitally it's more difficult to compete because somebody that can offer a product nationwide is just an easier sign up button, buy now button for the consumer. So it is definitely a challenge in a digital world.
Mhm.
And when everything was, hyper local decades ago, that wasn't the case. But now so many people are shopping for all their different products and services online or on their phone. It's really, really hard for a local anything to compete digitally. So we can help with that, in terms of, hey, if you have a great offer in Texas, and CD Valley can put that on our site as an offering. We can let our subscribers know it's a great offering in Texas. And so a lot of times I guess it comes back to it's a distribution problem for the credit unions, but also a marketing problem in terms of like you got to get the word out. It is very costly to get a new member or new customer. Most banks and credit unions actually don't know what it cost them, but it's a lot more than you'd think. And
Mhm.
so you got to go out and compete to find those new members, new customers. We can help do that in a big way.
Yeah, I've seen upwards of $300 per member, to
I've seen
attract them.
1,200 from very reliable sources in the industry. So yeah, it varies, and it varies whether it's, is it a deposit account or is it a loan? Like, it's pretty
Mm,
interesting.
right. Yeah. So, how can credit unions take advantage of this? And well, actually, let me back up. How do you solve for field of membership? Because you brought it up a little bit. How do you solve for
Yeah,
that?
we have a number of credit unions that are on our site, so you can just to back up. So the consumer can come to our site, they can sign up, see all 31,000 rates any given day, and then we have over 50 financial institutions where they're actionable. The consumer can hit open now; it goes right to their digital account opening, or if they don't have that, a lead form. And so we have a number of credit unions signed up, a lot of banks. But they could sign up and be actionable, and we could drive them leads. It's super easy integration, so we could do that quickly for them. But I think the biggest, so some credit unions are national or have the ability to be national, so that's a super big advantage, of course. Some are a state, some are counties, or some are old school seg based. And so I think one of the best strategies that hasn't been used on our platform a lot yet, but you see it used kind of in newspapers and stuff, is hey, offer that great enticing rate to get somebody to try you out. So
Mm,
say a 6, 7% CD rate for a 6 month CD, 9 month CD for up to 5 or 10 grand. Right, get people to come try you out so you can drive it, make it sexy, make it cool, make it like a great deal, and people will sign up and they'll jump through those extra hoops to become a member. And so if you do that, then you have a chance, you have just the opportunity to keep them and cross sell them on other products, but you got to go earn that.
yes.
And that's one thing we've seen. A lot of the financial institutions don't market to their CD clients that only have CDs to them. They do a pretty poor job of marketing and trying to make them a fuller relationship. So that kind of goes hand in glove as well.
Hmm. And so, with credit unions having the advantage of on the rate side, how can they use that to their advantage?
Yeah, well, so what we do on CD Valet is give them the opportunity. So if they sign up with us to be a partner FI, we will do a bunch of marketing on their behalf, and we will drive them leads. And if they're one of the best, offers on there, they're going to get a lot of views. Remember, we had 4 million people come to our site. We've had 14 million pages viewed on our site. So if you want to come in and offer consumers something that's compelling, you will get a lot of eyeballs on your offering. If you're, a credit union in San Diego and you want to drive a lot of business, or Maryland or wherever. So, the more narrow your footprint, the more challenging it will be through all your marketing channels. So
Yeah,
the broader you can be, the better off you'll be as well. But I understand different models and business plans.
yeah, yeah. And so research suggests that Gen Z is particularly budget conscious, particularly savings happy. Um, my younger daughter definitely, not so much my son, but can this help credit unions track younger members given the right technology and tools?
I think for sure. It's. I think offering that enticing deal to get them to try you is a great strategy. But also, you have the other half of the equation, which is you have to operationally be ready to onboard digital clients. They're not going to like a poor experience, and they will abandon very quickly. So, we've implemented at our bank very top-notch digital account opening. We work with a number of other banks and credit unions that have great digital account opening, but probably half of them or more the bank screens have either no digital account opening, it's very poor. And you
Mm,
don't just plug it in, you have to iterate and make it better, and you have to train your teams. You have to follow up very quickly to make it successful. We've seen that. We've iterated multiple times, and our bank recently raised 100 million in CDs, retail CDs through CD Valet in 5 weeks.
mhm,
And that's a combination of the distribution of CD Valet in terms of it finding the consumers, but also all the tech on the back end and the trained team. So that's a super important component. We've offered to banks and credit unions, hey, we'll share what we have and what we know. We are happy to be give advice or have people come visit and walk them through what we're doing. And we're always learning from everybody else along the way, by the way. So yeah, so we're open to that.
yeah, yeah, no, and account opening is one of those things that is so important, but also it seems to be difficult for many credit unions to navigate. What are the key things you need for a good account opening technology and experience?
Yeah, and there's several out there. We use a company called Prelim in our bank, but there's a number of other ones out there that are very good. And really, it's that seamless experience. And consumers always the big two areas they get stopped at, and you got to build processes around is IDV, identifying who they are, and funding. And those are the two sticky points where you really got to pay attention with your tech and how it's designed and your follow through from your client services team, your customer service team. But yeah, there's some great solutions. The probably the good thing is probably the last 3 years you've seen a huge investment from the community institutions investing in new digital. So there's a whole bunch of them that are going to come online or have come online recently,
Mm,
which I think will help them a lot.
yeah.
But our average transaction recently on CD Valet, it's 50 to 100 grand typically, and our the big campaign we did at Seattle Bank recently is 95 grand. You know, these consumers are moving a lot of money, and so having that trust and that good experience is critical because that's a lot of dough.
Yes, it is.
So
Especially you can spread that over hundreds and thousands of accounts. Um, so your report also found that approximately 42% of CD rate changes were increases, even though the Fed funds rate did not change last meeting. So and we're still seeing fluctuations in the yield curve. Why is this happening? What does this indicate? How should credit unions react, respond?
that's a great question, and it's always an interesting one. I'm kind of economics nerd a little bit, and you know, there's a little bit of disconnect. Like the banks don't just price off what the Fed's doing; they are competing with each other for those consumers. Plus, retail deposits are a lot more important to the banks and credit unions than going borrowing from the Fed or FHLB or wherever. And there's different strategies. So you saw it over the last probably 2 years as expectations of rates coming down, or year and a half. That a lot of the banks friends do all have the same strategy. They're having their best CDs price short and anticipation Fed's going to lower rates. I would say, hey, in a general rule, we don't actually know what they're going to do. The Fed, in their own predictions, is not accurate almost 100% of the time when they're projecting out multiple years because nobody can predict the future.
Oh,
And so there's different strategies. So that's one of the things we recommend is look at the curve. We have an intelligence tool that a financial institution could use, the CFO group or whoever's setting pricing, and they can look for the areas on the curve compared to everybody else. Hey, where can we be most aggressive and pick up business because others have all chosen to be in 6 months.
mhm,
Um, the other thing is, you know, as we've had a inverted yield curve, I mean,
mhm,
longer term rates were lower than short term rates, which is not the norm. That's been correcting itself, and I think we'll see what happens. But a strong economy, it's been resilient so far, could certainly make long term rates go up more.
mhm,
Um, but of course, if the tariffs and these things lead to more of a recession or something, we could see rates across the board go down. So who knows? But you got to pick your strategy. It's got to work with your asset liability management
right.
as well. But lots of opportunity to look at the data and say, hey, is it a 9 month where I want to be competitive, 18 month? Because you also want to take into account, and this is often missed, is what's the cost to acquire that customer? If I
Mhm,
can be aggressive at 18 months versus 9, I only have to get that customer for one time, pay for
Mhm.
one time because you're not going to keep them all. They want a good deal. And so you're going to have some runoff. And so you just got to think through, like a really strong rate for 3 months. I don't know. I don't see how that really works. Other than a retention tool for existing customers.
Mhm.
But looking for the spot on the curve to be is critical, and it evolves all the time.
Yeah, for sure. And so I always give my guests the final thought as we're wrapping up here. So I'm going to allow you. What is your final thought? Do you want to leave our credit union audience with?
I would say, it's like find ways to be competitive in a digital world that's just getting more digital every day on the marketing side and how people consume and buy products and try things out. And you're going to need to try multiple things as a community institution to go compete digitally. And it can't be you're just buying, the side of the bus with your logo on it and some of those things, which are great. But from a marketing standpoint, you really got to invest in different channels to get new customers because it's going to get harder, not easier, uh, for any community bank or credit union.
Absolutely. Well, thank you so much for